Welcome to the Sentient Brands Holdings. We are a fully reporting and fully audited public company with a clear focus on asset-backed growth in high-demand consumer sectors. Sentient Brands employs a capital-efficient asset-backed business model focused on high-margin manufacturing and distribution. Our subsidiaries operate across vertically integrated CPG production, serving B2B and B2C markets with inventory-backed revenue cycles, local manufacturing, and tariff hedging. Our approach ensures scalability and cash-positive operations. In the first quarter of operations, we added several high-impact brands to our quickly growing manufacturing and distribution portfolio, and between $1.5 and $2 million in assets, including receivables and inventory. Original New York Seltzer, an iconic naturally flavored soda, Aqua Emergency, long shelf life, Emergency Water, American Red Cross Emergency Hydration and MRE products, Burlone Italian-inspired premium food and beverages, and Arctic Frost, extra high-quality spirits for mass retail. SNBH has executed the initial phase of its 24-month acquisition strategy, adding key subsidiaries AIGFNB for food and beverage manufacturing, Aqua Emergency for emergency and disaster relief supplies, and Wyoming Bears for brand and product management, sales, and distribution. Our growth strategy includes a robust acquisition pipeline across pet care, food, beverage, first aid, and fire safety. We aim to expand government sales and build recurring revenue streams. We project over 300% annual growth in 2026 and 2027, targeting over $120 million annual run rate by year-end 2027. Sentient Brands Holdings, ticker SNBH, is a fully reporting and fully audited SEC filer. We invest in tangible, high-margin products through capital-efficient deployments. Our mission is to create secure, inflation, and geopolitics-resistant value for our shareholders through strategic local manufacturing and distribution with a global footprint. SNBH offers capital deployment into tangible assets, focusing on cash flow positive businesses and an integrated platform for manufacturing, financing, and sales. With product margins exceeding 40%, low debt, high tangible asset value, and positive cash flow operations at each subsidiary, we anticipate that our public listing will lead to a higher valuation and increased liquidity. As our acquisitions, pipeline, and growth strategy continue to be executed, our offering is based on preferred shares. Proceeds fund tangible assets and overhead. Investor capital is escrow-controlled. After 6 months, shares can convert into common stock at 130% of the principal, equating to a 60% annualized return. We ensure investor protection with escrow-controlled deployment. Funds are only released with board and financial controller approval. Proceeds from sales are returned directly to escrow. Funds cannot be leveraged, collateralized, or used to repay debt. Our 5-step process ensures capital security and return. 1. Controller and board approval for capital release to the subsidiaries to fund product manufacturing and acquisition. 2. Raw materials acquisition and manufacturing by AIGFNB subsidiary. 3. Finished goods inventory sold by the sales and distribution subsidiaries. 4. Escrow is repaid by the subsidiaries with principal and 10% overhead. 5. Funds are ready to be redeployed. We maintain fully audited quarterly financial reporting. Investors may elect optional approval rights for capital deployment. Governance includes an independent board of directors and a financial controller, ensuring transparency and compliance. CPG companies such as Coca-Cola, PepsiCo, and Celsius trade at significant multiples. SNBH aims to replicate or exceed their margins and shareholder equity capital structure, while having the ability and advantage of our quick growth and scale potential. Following the execution of our acquisition pipeline and uplisting, our expected market valuation ranges between $300 and $500 million. SNBH targets NASDAQ uplisting by 2027. Requirements include $5 million in shareholders' equity, a $4 minimum share price, a 2-year operating history, and strong governance. Uplisting is expected to enhance valuation, investor access, liquidity, and market credibility. Our investment case offers downside protection through asset-backed deployment, liquidity via public markets, yield through a 30% premium on conversion of preferred shares into free trading common after 6 months of holding, and upside via capitalization of our continued growth and scaling of our operations across high-demand consumables in first aid, disaster relief, pet care, and food and beverage sectors. Next steps. Review the detailed term sheet. Schedule an onboarding call. Participate in the structured offering. For details, visit www.snbh.markets or contact us at ir@snbh.markets. This presentation contains forward-looking statements that are subject to risks. Results may vary due to regulatory, market, or operational challenges. This is not a solicitation to buy or sell securities. Always conduct independent due diligence and consult legal and financial advisors.